Welcome to 30 Talk with Chad and friends. Log in each week for topics covering social, economic, and entertainment. It's time to talk 30.
So good evening, everybody. Good evening, everybody, and welcome back once again to 30 Talk. Today, we're going to talk about something that people kind of wanted to talk about for a very, very long time. So when I decided I'm going to do these 30 Talk sessions, one of the most requested things that people wanted to talk about was investing, right? Because we're in a pandemic, a lot of people are saying this is the time to invest. You should be investing now. And a lot of things have come up recently, as a matter of fact, especially with the whole Robinhood saga, which we're going to touch today as well. But I had to do my research and just find the right people. You know, I like to invite people who are knowledgeable about what we're talking about and people, you know, that I have a relationship with, that I know is going to give really good advice to our people. So for today's show, this friend of mine goes back to college days, actually to Lehman College. So shout out to all the Lancers at Lehman College, way back in the days. He goes by the name of Sean Lawrence. Sean is a registered investment advisor. He has 22 years of experience in the financial industry and has advised high net worth individuals on investments and managing their portfolio. He has worked at New York Life and TIAA. Over time, he has invested in individual stocks, and within the last year began trading options. So before we go any further, we're going to touch on a whole lot of topics today. Just want to let you guys know as well that do not walk away from here and say, well, Sean told me or Chad told me. That's not what this is about. This is about to give you guys the foundation. And just if you have kids, I want all the parents to get your kids and gather them around your computer, gather them around the phone, let them log in right now. And we're going to give you guys some really good basic information, right? Stuff that you might not know. I guarantee you're going to walk away today and learn something new today. So without further ado, I'd like everyone to please welcome my guest, Sean Lawrence. Sean, welcome, Sean.
Thank you. Thanks for having me. I appreciate it, man.
All right. So welcome to 30 Talk. And for those of you just coming on, just once again, share the link. This is a very, very important topic we're going to talk about today, right? So we're going to talk about investing, Sean. We're going to talk about investing and just like the world of investing. Right. And one of the things I've always heard about, and I'll be naive, right? When I was younger, always heard about stocks, and I never knew how to get into stocks. I thought you'd had to have a lot of money to get into stocks and do the stock thing and be, you know. And when I think stockbroker, I think of all these people walking around on Wall Street, right? Yeah. Right, so I want to kind of like demystify the whole process today, right? The whole, the whole investing and the whole stock market process and stocks and the whole thing. So we're going to start with our first topic today, which is the importance of investing.
Yep.
Right.
Yeah. So go ahead. I don't know if you're gonna say something just now.
No, go ahead, but you listen. Feel free to talk, man. I'm gonna learn to shut up sometime.
No, you're good. You're good. Well, yeah, definitely. It is important to invest because, to me, over the years, you know, I've learned about the importance of having your money work for you, right? So we all get up every morning, every day. We go to work a 9 to 5, whatever, you know, hours we work in our job. And we do that so we can make money. But what you have to also think about is that if we don't go to work, right, essentially, we don't make any money, right? So as we're working, what you want to do is invest some of your money, right? And we invest in different ways, whether or not we realize we wake up every day, we buy coffee, you know, we go something in a department store. We're really investing, right, by using our dollars. So investing is a way really to put your money to work for you. So when you're in bed sleeping or whatever the case is, that money is working. So what does that mean? What does that look like? You're talking about putting money, contributing in a 401k plan. If you're with a company that offers you that opportunity, oftentimes they're going to let you put some money into it, right, from your paycheck, and the employer is going to match a certain percentage of that. right? And then that's one aspect, and that's really, I guess, one of the first ways a lot of people invest ultimately.
Right. So let's kind of touch on the common ways, right? So we know people make money. People are accustomed to, you go work your 9 to 5, you get a little change. Some people want to put it under the mattress. It's not going to make money for you under the mattress, just sitting there, right? So what are the first things people do is like, well, I got to put my money in a checking account or savings account and an investment account, right? And this, when I was doing some of my research, I looked up kind of like what is the money that comes in from a checking account versus a savings account versus an investment account. And I can't explain a better way of why you should have an investment account as opposed to a checking. I mean, just strictly a checking or savings, right? We still need checking to pay the bills and, those kind of things, right? And savings, something in a savings still anyway. But I can't think of a better reason of why you should not have, there's no reason that us, especially now, right? This generation of adults shouldn't have an investment account, right? We have to think about our future.
Right, absolutely. And yeah, like you said, that visual really shows the difference, right? Starting at the bottom or to the left, average annual interest rate in a checking account is 0.5%. It's probably even lower than that right now because the environment we've been in is one where the interest rates have been slashed significantly and are, very at all-time lows at this point. So going up the rung, when you invest, you see the average annual return in the market is anywhere from 7 to 9%. You may hear that number thrown out there. But one of the things that I did as well, because when people are saying, okay, how should I invest in the stock market? There are a couple ways to do it. You basically go to a broker, which is ultimately, let's say, a company you've probably heard of, like a Fidelity, Charles Schwab, E-Trade, TD Ameritrade, and you open up an account. It's literally to open up an account takes like 5 to 7 minutes, right?
So so let's back up a little bit. So give those names again one more. Give those names again. Give a few of those names again one more time.
Right. And you'll notice I didn't include Robinhood, right?
Right. We gotta definitely touch on that in a little bit. Yeah.
So as a replacement for Robinhood, I would suggest you look at a company called Dow, like the dough of a bread,
DOUGH. Okay.
Right, Dow. That company was started by a brother that worked at TD Ameritrade, and he is now, established Dow. So it's a platform similar to Robinhood.
When you say brother, you mean somebody that looks like us?
Yes, exactly.
All right, so definitely something to look up. So Dow, DOUGH.
DOUGH. One of the things I like about Dow too is they give a lot of education about investing. So it's not like, oh, just put your money here. They have a lot of videos and tutorials and all this other information that really educates people about investing and that sort of thing.
All right.
So I will give some of the other names we talked about. TD Ameritrade, E-Trade, Schwab, which is SCHWAB. And then there's also Fidelity Investments.
So I've always had this thing, like, and once again, it's just because of ignorance, right? I've always thought that you had to have a whole lot of money to start investing. Is there a minimum that I need to start investing? I mean, and I know I'm jumping to kind of a question ahead, but is there a minimum that I kind of need to start investing? We know it's important to invest, and some people think, well, I don't have $5,000 or $10,000 sitting down. What can I start investing with?
Yeah, so that's the beauty of what's happened over the last, let's say, 10 years or a little bit less than that. You can actually start with as little as, like, I don't know, $25, $10.
Wow.
Right?
Okay.
And that's because there are a lot of these companies now that allow you to buy what we call fractional shares of stock. So if
what does that mean? Yes, give me an example.
So if Apple is trading at $150, right? I'm just gonna pull up my little handy dandy calculator here. And so Apple is trading at $125, right? And you invest $50, right? You're gonna then, your $50 is going to buy you a portion, a piece of the share of Apple. Right. So ultimately, the amount matters less, right? So those who are worried about the amount, I don't have a lot to start, I think what you should focus on really, if you're looking into doing individual stocks, is to worry less about the amount overall, but the consistency within which you're putting that money in. So
Gotcha.
say, hey, I'm going to have $25 per paycheck deposited from my bank account into that brokerage account. And over time, if you're buying fractional shares, you will wind up having one whole share. Right. So I started investing for my son. He's 11, 6 years ago, roughly, I started. And when I started investing for him, I did fractional shares. I don't do fractional shares anymore, but when I started for him, I started buying Apple and I started buying quality companies. And that's another thing when you're investing, you don't want to just go after any and anything. But bottom line is I started with fractional shares for Apple, Tesla. And of course, we know last year it was a big thing. Apple split their shares, Tesla split their shares.
Well,
so from a couple of shares now, he's in, easily well into double digits in terms of those stocks, which have gone up significantly.
So now I have a question: do all stocks have fractional shares, or just specific ones?
Yeah, specific ones that I am aware of. I know Robinhood allowed allowed folks to do that. Their Schwab has something called Schwab slices. So pretty much you can look at the S&P 500, which S&P 500 stands for Standard & Poor's.
We're gonna get to that in a second. Yeah. We're gonna definitely get to that.
So we're kind of going over, but
yeah,
it pretty much tracks 500 of the largest companies traded in the stock market. So it really gives you about a 75% coverage of the market when you're talking about the S&P 500. So they allow you to pick, I think it's 10 stocks out of that and say, okay, just allocate whatever money I'm putting in towards those slices of the S&P 500.
Gotcha. So somebody asked, what do you think about Vanguard? I guess when you were giving out the names of the different, like Schwab, I guess she asked, what do you think about Vanguard?
Yeah,
Not sure.
Yeah, Vanguard is a very good company. They've been around for a long time. They're pretty much known for low cost investing, right? Their mutual funds and other investments are really some of the lowest ones with the lowest expenses or fees you'll find. So definitely a good company. And again, each of these companies, in terms of if you're looking to do trading and so forth, you may have some that are a little bit better than others. So yeah, nothing wrong with Vanguard. Really great company.
All right, so let's talk about when you mentioned the S&P 500 and indices, and so these are things that we've seen on the news. If those of us who ever watch the news at 5 o'clock, right, or CNN, and you see the numbers tickering, and you see Dow Jones, and you see Nasdaq, and you see S&P. Can you just give us the basic information about what these three things are? What is a Nasdaq, what is Dow Jones, and what is the S&P 500?
Right, sure. So the oldest and the most recognized one would be the Dow Jones, right? And all that does is it kind of gives you a good sense of what's going on in the market in general. Dow Jones just tracks the stocks of 30 companies, blue chip companies, right? So when you're talking about Apple, Microsoft, Visa, McDonald's, etc. Right. So it's basically big companies that track the overall market. Now, it's considered, even though people look at it to figure out what's going on in the market, it is a very narrow representation, as you can imagine, because it only looks at 30 companies.
30, right.
Now, when you talk about the S&P 500, that is going to give you 75% coverage of the market, because that's tracking the stocks of 500 of the largest companies in the market.
Gotcha.
The other index, which a lot of people may have heard about, is the NASDAQ Composite. That tracks around 3,300 companies. A lot of them are tilted towards technology, but you do have stocks across the various categories or sectors in the market that, there are 11 different sectors altogether. So, if at any point you guys wanted to get more information, Investopedia is a really great resource to just expand your knowledge and read up about some of the additional stuff that may be involved with these indices.
Okay, so for those of you just coming onto the live, once again, welcome to 30 Talk. Today we're talking with Sean Lawrence. He is actually going to be giving us information, some basic information today about stocks and investing. Right? This is something that a lot of us we've heard about it, and we want to kind of demystify a lot of the terminology that we hear. And there's going to be a lot of questions, because I see quite a few questions already. Shout out to Effie in London. She says, I think she's in London. She says, I want my teenage son to listen to this show. He wants to be a stockbroker. Someone asked, do you trade options? If so, where are your go-to options? So we're going to talk about that towards the end, right?
Sure.
So we talked about the three different indices, right?
Mhm.
We're going to touch on Robinhood a little bit later, right? Penny stocks. That's something I've seen. What is a penny stock? And we're going to touch on options after that. But what is a penny stock, and what like can you explain that to me a little bit?
Yes. So generally speaking, any stock that trades under $5 would be referred to as a penny stock. I mean, some people may say anything under 10, but typically it's 5 roughly. But in terms of pennies, yes, you do have stocks that cost 10 cents per share, right? Now, issue with that is that essentially these stocks are people normally gravitate. Some people gravitate towards penny stocks because they see the price is relatively inexpensive or cheap, right? But again, just because something is cheap doesn't mean it's good, right? And just a pro tip here, institutional investors, which are big companies, you may have heard of hedge funds, mutual fund companies that are managing state endowments or endowments and that sort of thing. They will not invest in stocks of companies that are in some cases under $5, but it's also under $10, right? It varies, but generally speaking, under $5, they're not going to invest in it. So if you don't have the institutional investors, those big heavy hitters investing in those stocks, then why should you mess with it, right? It's one of those situations where people are saying, hey, I'm going to buy 3,000 or 5,000 shares of this, and it's going to go from 5 cents to 25, $50, and I'm going to make a lot of money. Hope is not a strategy when you're investing. So please stay away from the penny stocks. And I've been there before, and so yeah, you don't want to do that. You're just wasting your time, wasting your money.
And it's very rare that those penny stocks kind of skyrocket to right. So you're not going to find a lot of the what was that? I forgot that company. Few companies that it was with. Well, I'll remember it later.
Yeah, I mean, again, they're few and far between. Where and I think bottom line too, when folks are investing, you should look to invest and stay the course for at least 5 to 10 years. That's really where you're going to see great returns. So, and I think we had the visual up before, but just investing, let's say you have a lot of funds out there that track the S&P 500 we talked about. And so I went back and there's a calculator or a website folks can go to. It's don't quit. It's basically an acronym. Don't quit your day job. So I'll write it down because now I'm
DQY DQYDJ.
Right. DQ. Yeah. So repeat it for them. Yeah. Don't quit your day job.com. Yeah. So there's a lot of helpful calculators on the site, but I went back and I ran. If you just invested in a fund that tracks the S&P 500, right? And again, that's for someone who's just starting out. They don't know where to invest. If they don't want to do an individual stock, you can do a fund that tracks the S&P 500. And the returns on that from January 1st of 2009 through December 31st of 2009 would be 358% return. So if you invested $1,000, you would have made $3,580, right? So that's an example. Now, in comparison, picking the stock of a good company, if you invested $1,000 in Apple from the same period, January of 2009 to December 31st, 2019, right? You would have had that $1,000 would have got you $35,856, right? So it just goes to show
that's a great example. That's a great example
and the importance of investing. So you're getting returns both ways. Your money is not just sitting there not doing anything; it's working for you. So that's really why people should.
That other one is working a lot harder. That other one is working a lot harder for you.
So it just goes to show the difference between picking a quality stock versus if somebody bought a penny stock 10 years ago, they probably would have, been at the same place or even less, lost money. So
big shout out to Mike Daly, another one of our Lehman College people. Shout out to Mike. He said, not much success to be held in penny stocks. There's a reason why they're so inexpensive. One of the other terms we hear a lot, and I think you mentioned it earlier, was dividends and options. And I've usually hear people say that I'm trading options, or what does that mean? And then what does options mean, and dividends? Like, can you give us just a quick idea of what that means?
So dividends, basically, if a company, company like Apple, right? We all have iPhones and all that good stuff. This is my son Brandon. Shout out to him. But anyway, so we invest in good companies. That those companies have earnings, they grow, and so every year they say, "Hey, we've got this X amount of dollars." And Apple had $100 billion quarter the last quarter. They just reported earnings, $100 billion. So if you own Apple shares, Apple will distribute money to their shareholders in the form of dividends. And it's like, it's they'll declare it, and it's like you maybe get, I don't know, $2 or something for every share you have, whatever it is. They're going to pay it out to you. You can choose, when those dividends are paid out, you can choose to get it in cash, or you could say, you know what, I'm just going to reinvest it and have those dividends buy more shares. So that's how, again, the cycle, your money just grows like a snowball rolling down a hill. It just grows and grows and grows and grows, right? So hold quality companies for at least 10 years plus. You're going to be, phenomenally pleased at the returns. Options, a little bit more detailed. An options contract. When you buy an option, you're saying you have two types of options, right? You can do call options. And that's where let me pull up really quickly again. I don't know. I keep going to Apple, but so Apple closed at $134 today. So I could go out and buy a contract. A contract allows you to control 100 shares. You don't own the shares. You're controlling the shares of a company. So I could say, if I'm doing a call option, Apple's now 134. I can go out and I said, by December 2022, I'm anticipating that Apple's price will hit and surpass $150, right? Mm-hmm. Now, the benefit or the beauty of that is that I'm going to pay a premium to control those shares. So let's say to control one share, one contract, of Apple, that may be expressed as like $12. But because you're controlling 100 shares, you'd have to take the 12 when you're in your brokerage account, multiply that by 100, it'll be $1,200, right? Gotcha. So instead of me spending 134 times 100, it will be 13,000 some odd dollars, right? I could control 100 shares of Apple by spending $1,200. Now, what happens when you do a call option is that as Apple's share price starts to move towards that 160, that options contract, I can sell that options contract for a higher price than what I pay for it. Let's say, you don't have to, it doesn't have to hit that price for you to start making money. Bottom line is someone will be willing to take that contract off your hands by, instead of now paying $12 per contract, in the next couple of weeks, it could go up to $15 a contract, right? So instead of getting $1,200, you're now getting $1,500. So minus your outlay, that's a $300 return. And so people buy multiple contracts. Sometimes they may buy 10 contracts, etc. The growth on options, when you're trading options, the growth is really astronomical, right?
So one of the things that I also see people. Well, I saw someone talk about property, but we're not talking about investing in property today. We're trying to just keep it focused primarily on kind of like stocks. And I've heard people talk about what your portfolio should be and how it should kind of be diversified, right? Mm-hmm. So it's probably not a great idea to just have all your money in the stock market, right? Just every single dime you have, it'll make more money for you. But this is just a quick graph of more or less your 401k is also being invested,
Yes.
Right. And that's your whoever is doing that, they're also investing money that you're putting in there, and usually a lot of times the company is matching. So if you do have a 401k in your company, or 457 at your company,
or 403b, right?
3B, right, TDA,
Right.
whatever it is you have, sign up for it. Make sure you put money in it. Make sure if you can afford to, up the initial amount that you put in there, because the return is going to be really good for you when you're ready, when you're actually ready to walk away. And these are just some types of diversification that you can have, to set yourself up later in life, right? Like I said earlier,
Right.
we are the adults, right? So we have to kind of find a way to do better than our parents before us did.
Yep.
Another term that I know you wanted to discuss, and we kind of discussed when we spoke a couple of days ago, was I hear this term a lot when we see these graphs. We hear about a bull and a bear market.
Right.
What we hear it bullish, bearish,
Versus bearish.
right? So I'm going to put a graphic up so you can kind of explain what a bull market is and what a bear market is.
Yep. So ultimately, as a visual kind of describes, a bull market is one where the stock market is going up. It also kind of, you see how a bull strikes or charges, they kind of, their head is down, but they're coming up, right? Kind of like you flicking with the horns or whatever. So that's basically symbolizes, hey, the market is going up, unemployment is low, stocks are rising, prices are going up. Bearish, right? A bear swipes going down with their paws. And so that means, hey, the market is in the downward, cycle or trend. Unemployment is high, recession approaching potentially, prices are going down. So that's bottom line when you say, hey, the market's, are you bullish? Are you bearish? Right? It just means, what are the sentiments of the market? Is it going up or going down? Essentially.
So what are we in now? Because we had this high unemployment, right? But then there was this point where the market just seemed like it was kind of weird to read. So where are we now in terms of a market? Like,
yeah, we're very bullish. We're very bullish. And so
Okay.
there's a distinction between how the stock market is performing versus the economy, right? They don't always go, well, never in lockstep for the most part. So what we've been seeing is, after the significant drop or recession, of sorts after the coronavirus, market dropped 25-35%. A lot of stimulus going into the economy from the government. You have a lot of people at home working from home. I've been working from home since March. And people are now becoming traders, or people are now putting a lot of money into the stock market. Stimulus money. Some folks don't need it, right? Or don't, and so they put it into what's the next best place to put it, in the stock market. So a lot of that has fueled the run up in stocks that we've seen. A lot of them technology stocks benefited from the pandemic and so forth. So yeah, we're definitely bullish right now, and pretty much at all-time highs, if you will. So we saw a little bit of nervousness in the market recently after the whole AMC, GME trades and so forth with Wall Street Bets and Reddit and whatnot. So
we gotta touch that. We got two more topics before we touch that.
yeah.
One of the things we wanted to also talk about was ETF. You kind of explained it to me a couple of days ago. Can you explain what that is to everyone out there? And if for those of you that's just coming onto the live, once again, we're talking with Sean Lawrence today. He's talking about investing. He's talking about if you've never invested before, we're just giving you some basic information of things that you need to know when you walk into a broker, right? When you actually, what was the name of the Dow, right?
Dow is a good app, brokerage firm. So I'd say definitely check them out. DOUGH. There are other ones you can just sign up for, an brokerage account online. Right. And again, process takes 5 to 7 minutes roughly.
Right. You can do it. I personally do it through my Chase Bank, and I just do it there. So ETF. What is ETF? What is that?
So an ETF is an exchange traded fund. That's what the symbol or what it stands for. Exchange traded fund. You've probably also heard of mutual funds, right? Very similar, but there's some differences, right? Just think of both of them as a basket that has a bunch of stocks in it, right? Now, what you will find is that mutual funds, if you buy or sell a mutual fund, you get the closing price of the market. They look at how all the stocks performed in that basket. They value them as of close of the market at 4 o'clock. So you get that price. ETFs are a little different in the sense that, again, same basket of stocks, but what you find with ETFs is that you'll find a lot of them have different themes. So you could have right now semiconductors industry is a very, very hot. We use semiconductors in all facets of life, and phones and cars, Internet of Things devices, et cetera, et cetera. So big push and growth in that sector. You can find an ETF that tracks semiconductor stocks, right? So you can also have an ETF that tracks biotechnology stocks, right? So any particular thing, there's even an ETF that tracks water, right? Or you can, for invest in water, right? So whatever theme you can find or want to find out about when it comes to picking an ETF, you can find it. And there's a pretty good website people can use to kind of sort through different ETFs. It's called etfdb.com. So
etfdb.
Echo, Tom, Frank, DennisBoy.com.
DennisBrown.com. Got it.
Yeah.
All right. Shout out to everybody out there that got plug energy back in the days, because I know some of them were happy when they were, doing that. That was one I was trying to remember earlier.
Oh, yes.
Yes. So we got to that part, and so I want to touch into when to buy versus when to sell. For those of us that we have Dow, right? We have the app, and we're trying to figure out, when do we buy? I mean, I've heard it before, but I kind of want you to say it again. When do you buy? When do you sell?
Yeah. So in general, if you're investing and you want your money to go to work as hard as possible for you, and you're, let's say, investing for a goal of either retirement or pass on generational wealth, you want to just hold long term, right? You want to buy and hold long term. Now, once your knowledge level gets up a little bit more, and you're probably putting in certain amounts of money, let's say, that are targeted, right? You're not just doing the $50, $100 recurring amounts. Then with that, I would say don't worry about timing, because over time, as you're putting in on a recurring basis, you're going to average out the cost during various cycles of volatility in the market. Market may be up one day, you're going to buy fewer, your money is going to buy fewer shares. When the market's down, another time you're investing is going to buy more shares, right? Money is just going to stretch farther. So over time, you average out the cost at which you're investing. But if you're now talking about, hey, I have, $5,000 to deploy in the market, then you want to wait for a day where the market experiences a pullback, right? Or like we saw the last 2 days ago, right? I think it was Friday or Monday, right? So those are days we would look at as a buying opportunity. And I like sales. So whenever the market drops, you should look at it as an opportunity to buy stocks on sale at a discount. Right. So you never want to buy at the highs. Let's say, again, if you're putting in a big chunk of money or whatever, you never want to buy at the highs. Selling it, that could just vary depending on your needs, right? You want to liquidate or sell some of the shares that you have, but it's going to vary. And sometimes people are investing for other purposes other than retirement. It could be a medium-term goal, 5 years, 3 years out, and how you allocate the funds, of course, based on risk is based on when you're going to need the money. So,
all right. So, folks, we already did a half an hour. I'm going to give you guys extra 7 minutes because we have one final topic to kind of discuss. But I told you guys this was going to be a very informative. I've learned quite a few things already. I want to touch on the Robinhood thing because that's been on the news. For even if you're not an investor, you've kind of heard about what's going on with Robinhood and the whole GameStop thing, and a lot of us didn't understand it. A lot of people didn't really understand what's happening. Shout out to Carissa that's logging in from Antigua. Shout out to 268. Mike agreed with you. He said when to invest, it kind of depends on your financial needs. Mm-hmm. We're gonna get to the rest of the question. Somebody said they all left Robinhood. So what is it? Can you give us can you kind of explain what happened? What is the whole can you explain the Robinhood saga?
So Robinhood gained a lot of popularity over the years because one, they were all about quote unquote democratizing investing for the small folk, right? Or little guy, right? And so no fees for trading, buying stocks. Normally back in the day when you bought one share of stock, or 100 shares, you would pay $6.95, or somewhere along those lines. So Robinhood had no fees for trading or buying stocks. So you basically, all your money goes to work for you. Now, recently this didn't just start the other day. I mean, I was kind of getting some more information about when this all started, but bottom line is there's what's called short interest in a stock. What short interest is that companies, big hedge funds and mutual fund companies, they are betting, right? They've placed trades betting that, hey, the stock of this company is going to drop, right? And so a company like GameStop, when you look at GameStop, fundamentally, it's not a great company to invest in, right?
Really
When was the last time anybody walked into a GameStop to buy a game, right? So the future of gaming,
download it now, whatever,
there you
right?
go. Right.
Yeah.
And so the future of gaming is online. You download the game, you play it over the cloud and so forth, right? You may have a couple of people here and there going in to buy little, whatever the controllers and so forth. Yeah. But for the most part, it's a dying business, right? So ultimately, when Wall Street bets and these people on these forums determine, hey, you know what, some of these big companies have a lot of bets stating that the stock is going to drop. So pretty much short interest is really where let's say I had a car and let's say, I don't know, BMW, 30 grand for the car, whatever. And someone, you said, Chade, I'm going to borrow, or it's your car. I'm going to borrow the car from you. And I said, look, I'm going to sell it at the current market price of $30,000. And ultimately, because I know that the value of the car is going to drop, what I'm going to do is I borrowed it from you. I sell it immediately at the current price, right? And then once the value drops, I buy the car back from somebody in the open market at let's say now $10,000, and I give you back the car. It's the identical car. So right. What has happened, I've made $20,000 in the process, right? I borrowed the car from you, right? Sold it immediately for $30,000, right? The value for cars in the market drops.
Okay, so now got you.
Right, and so I basically return it to you because I now made the difference between 30 and what I sold it. So 20,000, right?
Yeah.
So bottom line is, that's what short interest is. Now, what the guys on the forum did, or people all over, they started buying up the stock of GameStop, right? GameStop, and that forced the stock price up. Now, because I borrowed shares, let's just say not a car, shares. I borrowed the shares, sold them. I have to return them to the person who I borrowed the shares from. Now, because of this, what we call a short squeeze, or because of the prices going up, I'm going to have to locate shares on the open market and buy it at the high current price. When everybody who is betting against the company now does that, when they're buying in at the current price up here, that forces the stock price up even higher. So that's what's called a short squeeze. So essentially, if people then cashed out at those ridiculous prices, you bought in at a lower price, you're going to make a lot of money, right? Now,
so then why stop that though, right? I mean,
so what happened was so Elon Musk was on Clubhouse the other night, and he had, I was on the call at like 1 a.m. and he brought on, I'd listened to the guy before, the CEO of Robinhood came on. Bottom line is, these brokerage companies, and a lot of people, he's right. A lot of people, I heard someone say, don't read their brokerage disclaimer stuff when you're filling this out. They could stop trading in any security or whatever, because they have these liquidity requirements that they have to meet, right, from their clearing broker. So because of the crazy interest in GameStop and the volatility, meaning the crazy run up in the price, people are buying shares, they're buying options contracts. They have to, if people want to sell these things, they're going to have certain amount of liquidity. Right. So they said, look, I think the guy said he was in his bed at 3:00. He got a team called him, whatever. And there was a demand, let's say for like 2.4 billion or 3 billion for liquidity needs. So they had to shut down trading because of all the craziness going on with that.
So is what that Reddit group doing? Is that illegal in essence?
No, it's not. So because there's public information out there about different hedge funds, different companies who take certain positions in these companies. They have what these forms call 13F filings that they have to file these documents. And there are a lot of websites out there that there's one site called Whale Wisdom. You can go and type in the ticker symbol and you can see which companies have puts or calls against a stock, right? Puts meaning they're betting that the stock's going to go down, and some bet calls betting that they're going to go up. And guess what? In some cases, these companies hedge. Some will have a call and they'll also have a put. So they're playing both sides. So one way or the other, they're going to make money. And bottom line is the biggest beneficiary of all this were these hedge funds, because yes, some individual investors made a lot of money here and there, but as you can see, never get caught up in something like that, especially something that you don't understand. Don't get FOMO, fear of missing out, because as we see now, what's going on with GameStop, it's coming down.
Right, and everyone predicted AMC is going to be next, and these other. So let's we're going to start to wrap up because we are like a little over time. So let's give a few kind of quick tips. I mean, you gave a lot of tips already, starting with that the first thing is the app. I'm always about supporting our own, right? And the app that you mentioned earlier, DOUGH, Doe. If you guys don't have it, download that. Let's support a brother, right? Support the brother's app. So tips to start trading stocks, right?
Yeah. So if you want to invest in stocks, I would say stick with quality companies. Don't go chasing for penny stocks and expecting them to run up significantly and you'll be a millionaire or whatever the case is. Try to invest and stay the course for at least 5 years. 10 years is really optimal to really see growth. Again, get started as early as possible and be consistent. I'd say reducing debt or eliminating debt as best as possible is going to allow you to free up as much of your money as possible. And on the expenses side, yes, that's definitely important, but I guess not necessarily for individual stocks. It's more so if you're looking at mutual funds or ETFs, I'd say you generally want to stay under 1% for the ETFs and or mutual funds that you're looking at. And by the way, there are some great ETFs out there. One that's very well known, got a lot of buzz, people want to check out if you're interested in that. Their theme is all about disruptive innovation. So anything, anywhere that deals with disrupting technology or and that kind of thing, you could check them out. It's called ARK, A-R-K, ARK Invest. It's run by a lady called Kathy Wood, and all of their ETFs last year had at least 100% return plus. So that's just a fund. That's not a stock. This is a fund, but and by the way, the ETFs are actively managed. So these people, whoever does the funds, they buy and sell actively. And
so give out that information once again for like people who are just.
So that would be ARK, A-R-K Invest, right? Investments. So you can look them up online. Two more things I'll tell you guys to just get your knowledge up. And these are shows that I actually tune into and watch on YouTube. They drop a ton of gems. One is if you're just interested in investing, general investing, make sure you check out Earn Your Leisure. So it's EYL, Earn Your Leisure. They have a show specifically every Monday called Market Mondays. So it's Market Mondays with Ian Dunlap. So Earn Your Leisure, Market Mondays with Ian Dunlap, right? That's one. Number two, if folks are interested in learning about trading options, specifically long-term call options, right, where you're betting the price of the stock is going to go up, you would want to check out the Come Up series. It's called the Come Up series. I definitely encourage you to go back from the beginning. There's over 80 hours of content. The gentleman or the guy whose show it is, co-hosted by a sister. Her name is Jolyn. He's been trading since the age of back in college days. He's 36. He's a venture capitalist, and he trades options. His mantra is the game is told, not sold. So this is, trust me, since I've started trading options, right, in October last year, I've managed to grow my account from 17,500 to about $50,000. This is just money I had sitting in a
Right.
old 401k, whatever. So from October 17.5 to now $50,000.
Very good.
So
Good
yeah,
info.
options is it's yeah. So that one is the Come Up series. It's on YouTube. They go live every Tuesday as well and Thursday. But bottom line is they teach you everything. So when you're, by the way, the other two things I got to say finally is that when you're investing, you want to look at fundamentals and technicals. Fundamentals just deals with, okay, is the company making money? Do they have good products? Do they have a significant moat? Meaning, are they really like the leader in this space? Nobody can really take their crown, kind of thing. Do they have a lot of cash on hand? That's the fundamental aspects. Technical aspects would be where you now look at a chart, and if we talked about putting in lump sums of money in the market, you can identify based on the chart where is a good time to buy that stock, a good entry point, exit point, etc. So they teach you both, and they also again teach you how to trade options. So
Gotcha.
I would
Gotcha.
that's definitely good stuff.
People, if you guys, there's so much great information that came out of today. If you guys get a chance to log back in at any time, you can watch this. This will be up for eternity, right? So it's gonna be great information out there. I'd like to thank Sean once again. Like, who would have thought back from Lehman College days that we'd be here right now, right? So shout out to everybody out there. Once again, so much great information today. First thing I'm gonna do when I leave here is go and get that app. And I'm going to go and look back over all the information you gave. Hopefully, those of us, I want your kids to watch this. I want your parents to watch this. Hopefully, everybody walked away with some great information today. Thank you once again, Sean. And for those of you that want the Forex and the Bitcoin conversation, we're going to have that again on another day coming up. And a lot more topics. So just keep it locked right here. Thank you, guys. Nita, thank you so much. Dorsel, thank you. Jaga, thank you. Disha, yeah. So everybody's lucky. People are very happy for this information that was what was given today. So thank you so much, Sean. I appreciate it so much, man. And
thanks for having me, man.
Hopefully we Kenya said we shall shout out. Lord, these Lehman College people, I swear, these CSA people, man. But we hopefully I want to have you back on another day, like for a panel discussion.
Okay.
So I have once I go through the Forex stuff, because I want to do another part on actual like real estate investing and also Forex and Bitcoin, and just have everybody kind of here together to have that conversation. Right. So thank you so much once again. And we're gonna just everybody have a great night and stay safe.
All right, man. Thanks a lot.
All right.
Appreciate it, bro.
All right.